Hello everyone. So today we'll take some more questions on money market instrument. Some questions are going to be very important. New type of questions are also there, taken from exam and other reference material. So first I will ask you to write a note on repo market. Already we have solved few questions on repo, but it would be better if you write down few more lines and then we will be able to take some more questions from your exam. Ready? So please write down note on repo market. Note on repo market. So write down note. First point, write down the convention in the repo market. The convention in the repo market. The convention in the repo market for coupon calculation. The convention in the repo market for coupon calculation is 30 by 360. 30 by 360 means 1 month is equal to 30 days and 1 year is equal to 360 days. So for coupon calculation, follow 30 by 360, but then I have written a comment. However, if the institute gives number of days, follow the same. If the institute gives you number of days, follow the same. So in some question, institute has given 365 days. So you will take 365 days. Okay. So this is for calculation of coupon. Coupon is the predetermined rate on that bond. Now write down point number 2. Repo should be looked upon as a collateralized borrowing. Repo should be looked upon as collateralized borrowing. Repo should be looked upon as collateralized borrowing amongst bank in the money market. Repo should be looked upon as collateralized borrowing amongst bank in the money market. It means that the one bank is using the government security as a collateral to obtain the loan. The collateral being the government security. The collateral being the government security. The collateral being the government security. So repo is nothing but you are using government security as a collateral to raise the funds. But there is one important point, that you are not just giving government security as collateral, you are transferring the ownership to the lender. So third point, write down, in fact the government security is not just a collateral. In fact, the government security is not just a collateral. In fact, the government security is not just a collateral. Instead, its ownership is transferred. Instead, its ownership is transferred from the borrower to the lender. Its ownership is transferred from the borrower to the lender. So the lender has complete safety. So the lender has complete safety. Even the ownership of that government security is transferred to the lender, so that the lender has complete safety. If the borrower does not pay, the lender has already the government security in his name. So this is how the repo market works. Now write down next line, point number 4, and then I will explain this diagram. This is required to solve these questions which they ask you on repo. He can sell off the government security. He means the lender. He here means the lender. The lender can sell off the government security The lender can sell off the government security and recover the amount in case the borrower fails to repay. 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 So, the advantage of having government security is that the lender can sell it, recover his money, and that is how this repo market works. The steps in the repo are, write down the steps in the repo are, now first you draw this diagram, this part of the diagram, time 0, that is today. Today what will happen? Write down borrower bank. Borrower bank will sell the government security, GSEC government security at full price. At full price. Full price means dirty price. Dirty price means including interest accrued. Dirty price means including interest accrued till the date of sale, including interest accrued till the date of sale. And what the lender bank will do? The lender bank will give loan equal to sale proceeds, will give loan equal to sale proceeds. How to calculate this loan amount is asked in the exam, and that is what we will learn today. Okay, we have already taken few questions, we will take some more, no problem. More practice is better than less practice. Now write down time is end of the repo period. End of the repo period. Suppose repo period is 14 days. So what will happen after 14 days? Borrower bank will repay the loan along with interest. Borrower bank will repay the loan along with interest to the lender bank, and this interest will be calculated as per the repo rate. That is what the two parties have agreed. And then what this lender bank will do? Lender bank will return the government security. So borrower bank will repurchase government security at the loan repayment amount. So you are selling today and buying it later. That is called repurchase option. Selling today and buying later. And if you don't repurchase, the lender can sell the security. The lender can sell the security. So the question we will be asked is, how much amount of loan was given by the lender bank to borrower bank? How much amount was repaid by the borrower bank to the lender bank? Okay, what is the full price on the date of lending? What is the full price on the date of lending? And sometimes in the question they will give you the repayment of loan and the loan amount, and the student has to find out the repo rate, reverse working. Is it right? So this type of questions are very easy. They will give you bonus marks in the exam. So write down one small note below. What is full price? Full price is equal to clean price plus accrued interest based on 30 divided by 360 day count convention. So when you will compute accrued interest, you will use the coupon rate, count the number of days from the last interest payment date till the date of transaction, and if the question is silent, you can take 30 by 360 day count convention. Okay. For calculation of coupon, the convention is 30 by 360, but for calculating the loan with interest, for calculating the repayment of loan with interest is calculated at repo rate. The repayment of loan with interest will be calculated at repo rate, and here we are going to take actual number of days by 360 days count convention, divide by 365 days count convention. Now, if institute gives you something, then you have to give full respect. Otherwise, for coupon rate, use 30 by 360. For repo calculation, which is usually for few days, you will take actual number of days, divide by 365 for interest calculation. Follow the institute if something is given to you. Now, write down from the final repurchase price. From the final repurchase price, we deduct the interest accrued. We deduct the interest accrued to calculate the clean repurchase price. From the final repurchase price, we deduct the accrued interest. We deduct the accrued interest to calculate the clean repurchase price. To calculate the clean repurchase price. So, from the final repurchase price, if they ask you what is the clean repurchase price, you have to deduct the accrued interest. In bond valuation chapter, you have learned clean price equal to dirty price minus accrued interest. Dirty price or full price, dirty price or full price is clean price plus accrued interest. This is discussed in detail in bond valuation chapter. Okay. So, now write down one question. Please write down one question in your notebook. PNB wants to borrow rupees 500 crore. PNB wants to borrow rupees 500 crore via repo using 10% GOI, using 10% GOI 2032 security, using GOI 2032 security presently trading at rupees 103.10, presently trading at rupees 103.10 as on 11th August 2017, as on 11th August 2017, presently trading at 103.10 as on 11th August 2017. Next line, the coupon dates are 24th March and 24th September. The coupon dates are 24th March and 24th September. This question has not yet been asked in the exam or given in any of the study material of the institute. Repo is for a period of 12 days. Repo is for a period of 12 days. So, for repo you have to calculate interest for 12 days and the repo interest rate is 8%. The borrower bank has to pay to the lender bank the interest on the amount borrowed at the rate of 8%. Show the nature of transaction involved. Show the nature of transaction involved. It means you will have to calculate full price, you have to calculate the loan amount, you have to calculate the repayment of loan, full, and you have to calculate the repayment of loan clean price. So, these 4 calculations we will do. Mark it, very important, waiting for being asked in the exam. So, first we will write down step 1. First we will write down step 1. Now, in this question 103.10 is given, but not clearly mentioned whether it is clean price or dirty price. So, assume clean price. Assume clean price. Write down clean price is equal to 103.10. Always assume face value 100 if the price is around 100 rupees. The price is moving around 100 rupees, something in 90s or something in hundreds are given, the student will assume face value is 100 rupees. Assume face value is 100 rupees. And how to compute the interest? How to compute the interest? So, let us see. Last interest was paid on 24th March. Today is 11th of August. So, interest will accrue from 24th March to 11th August, that is 137 days. You can count if you want 137 days. This is how the interest will be counted. If the question is silent, you can take 360 days for coupon calculation. You can take 360 days for coupon calculation. So, 100 into 137 divide by 360 into coupon rate 10%. So, the answer comes to approximately, check, 3.8056. 3.8056. So, what is the full price or dirty price on 11th August 2017? What is the full price or dirty price? So, you will take clean price plus accrued interest. Come on, Yogesh, clean price and accrued interest. So, that will be equal to 103.9056. Very good. 103.9056. So, this is my full price of the bond. So much interest has already accrued. Now, while calculating the loan amount, we will take this money, this value. Okay. So, next line, write down step number 4. Amount borrowed is equal to, in your institute study material, they have used the term first leg or start proceed. First leg or start proceed or loan amount borrowed is equal to nominal value into dirty price by 100. That means, if 100 rupee is the face value, dirty price is 100 and something, 106 point something. So, there was some typing error, I will just need to rectify. This is 106, you are right, 106, typing error. And then sometime you may not get the full value of the loan. The lender may pay little less than the full value. So, that is called margin, but in this question margin is not there. But if margin is there, then you will have to also apply this part of the formula. You may not get the full loan. Just like when you go to the bank and say, this is my share of 1 lakh rupees, give me 1 lakh rupees loan, they are not going to give you 1 lakh loan. They will give you 80 rupees or 70 rupees. But because it is a government security, the margin may not be there or margin may be very low. Right now, don't bother. So, this is your 500 crore. This is the dirty price, check if it is right. 106.9056 divide by 100. So this is mathematics. This should be the total loan amount into 100 minus 0 divided by 100. This portion will not affect the answer, but still we will write in the formula. Your near and dear institute will ask you this. So therefore the answer is 534.528. You are right. The student is right. He is giving the right answer. Wonderful, amazing. So this is the amount borrowed. On this amount, we will calculate interest at repo rate for 12 days, right? So step number, next write down accrued interest, write down accrued interest for 149 days, accrued interest for 149 days. Why 149 days? 137 days and plus 12 days. 137 days and plus 12 days. %, into 500, 10% into 500 into 149 divided by 360. This 149 is 137 plus 12 more days. 137 plus 12 more days. So accrued interest. Now write down, just 1 second. Just 1 second, write down second leg. This amount borrowed we have calculated 534.528. Below that write down second leg. I forgot to write here, repayment at maturity. Repayment at maturity. Repayment at maturity equal to start proceed into 1 plus repo rate into number of days divided by, for repo calculation you can take 365 days or 360 days also you can take. So start proceed is 534.528 into 1 plus repo rate is 8%, 0.08, number of days was 12, divide by 365. So that is basically interest calculation. Okay, using repo rate. So this is the repayment amount. So please help me. Okay, 0.08 into 12 divided by 365 plus 1 into 534.528 is equal to, how much amount will be repaid? 535.94. On maturity, the amount to be repaid will be 535.94. Check the answer, 535.94. Just you have to apply 8 days interest, 12 days interest. 12 days interest, you will get 535.94. Okay. Now write down X interest price This is the last answer, X interest repurchase price. From the amount repaid, we will deduct this accrued interest. From the amount repaid, we will deduct the accrued interest. The student has a query, second leg, will it always be repayment? Yes, of course, first you borrow, then you repay on maturity. Very good question. Second leg will be repayment, first leg is loan. Institute is using this term, you can use the term loan and repayment. So now you deduct this accrued interest from the previous answer, and your answer is X interest repurchase price. X interest repurchase price is 515.2395. 515.2395. So these are the questions they are going to ask you in the exam. I hope you have understood this 149 days. At the date of taking loan, we already had 137 days, and when the loan is repaid, 12 more days got added. So the interest will keep on accruing every day. So the answer is right, 515.2394 crores. If there is some minor difference in the decimal, it's okay. Okay. Now I am going to dictate a very important question, because this question is a reverse working question. They will ask you to find out the base data, and the question will give you the answer. Oh my God! So please note down the question little fast. Please note down the question little fast. Question is from July 2021 exam, 5 marks only. The bank BK enters into a repo. The bank BK enters into a repo for 9 days. For 9 days with bank NE. With bank NE in 6% government bond. In 6% government bond. Previous question was from reference material. This question is from July 2021 exam. I repeat, the bank BK enters into repo for 9 days with bank NE in 6% government bond. In 6% government bond 2022 for an amount of rupees 2 crore. For an amount of rupees 2 crore. Underline 9 days, 6% is coupon rate, 2 crore is the amount. Previous question was from reference material, not from institute's publication. Okay, that was having some different calculation. So that is important. We have to learn to solve varieties of question. So that was another variety, this is another variety. The other relevant details are as follows. Come on, focus on question. Other relevant details are as follows. First leg payment. First leg payment. This time they have themselves given you the first leg payment, which is like loan taken at the beginning. But the institute uses first leg payment start proceed 2 crore 6,750. Second leg payment, keep writing, repayment proceed. Question note down if you don't have. 2 crore 31,759. This is on maturity repayment. Now write down initial margin 1.25%. The lender will not pay you 100%, lender will pay you 100 minus 1.25%. And the next is days of accrued interest 240. Days of accrued interest 240. In the previous question it was to be calculated, now this is given. Okay. So, either way I have taught you how to get it. This is the last interest payment date till the date of loan. How many days have expired? That is called interest accrued. Now, write down, the question says assume 360 days in a year. Oh, respect the institute. Everywhere we will take 360 in the denominator. Everywhere we will take 360 in the denominator. Otherwise, we will take 360 for coupon calculation and 365 for repo interest calculation. Anyway, don't worry. You are required to calculate. Come on. Repo rate, reverse working this time. Repo rate, dirty price. Dirty price you have to find out. Full price you have to find out. Dirty price, and then you have to find out the clean price. You have to find out the clean price. Okay. Try yourself. Give me the answer, repo rate. Give me the answer, repo rate. You are given the repayment of borrowing, loan amount, 9 days is the repo. So, you can find out the repo rate using the formula of repayment of borrowing. In the formula of repayment of borrowing, we apply repo rate in the formula. So, you can find out the repo rate. You can find out the repo rate. Okay. So, please try. You can find out the repo rate. Reverse working question. Anybody who wants to reply, show your intelligence to the universe that yes, I am intelligent. I can do this kind of questions. Yes, come on. Please reply. Okay, time over. Let us now check the answer. For getting the repo rate, I have to apply the formula of repayment of borrowing. Repayment of borrowing, as you know, is the amount borrowed plus interest on amount borrowed for 9 days, and that gives me this value on maturity. So, using the first and the second number, you can easily find out the repo rate. Okay. So, please solve. Write down step 1. Step 1. This is a reverse working question. Yes, you are right. This is your exam. In the study material, they will give you straight question. In the exam, they will give you reverse question. Okay, that is our institute. So, write down the formula for second leg. Second leg is equal to start proceed, that is your amount borrowed in the beginning, which is given 2 crore 6,750 into 1 plus repo rate into number of days divide by 360. Then your question is why 360? Because question says assume 360 days in a year. So, I am going to put the numbers and you have to solve this equation. You can solve in any manner you want to solve, whatever method you know to solve an equation, apply, but give me the correct answer. Give me the correct answer. The repayment amount is 2 crore 31,759 and the amount borrowed in the beginning was 2 crore 6,750. 1 plus repo rate into 9 by 360. 9 days divide by 360 days. 360 days is given in the problem. So, the student will have to solve. Formula is not compulsory to fetch full marks. You can solve by any manner. As long as you give me the correct answer, the institute will give you marks, because institute have this number with them and they want to know whether the student can get me this number. Anyway, so this is a simple interest formula you have to apply. Simple interest formula. You can take the difference between the two as interest amount and then apply simple interest formula, then also you will get the answer. That is also okay. So, anybody, what is your final answer? Who would like to answer? Final answer. Final answer, please. I don't recommend that you have to use the same formula, but it is easier. You can use it. There is no harm. If something is easy, you can use it, or you can use your own way of solving. Institute will focus on this. Your first question was, what is repo rate? If the examiner finds you have got 5%, he will be happy and he will give you 2 marks for this much effort. Okay? So, repo rate comes to 5%. Now, the second question was, what is dirty price? Now, in our first formula, we use dirty price in the equation. So, therefore, using the dirty price, you can find out the answer. So, now the question is, what is step 1? This time we are using the reverse calculation. First, I am using second leg equal to start proceed. So, this is like repayment. Repayment is equal to loan amount into 1 plus your interest calculation, repo rate into number of days by 360. Okay. And then we have just solved the equation. Otherwise, what you can do, go back to your school days. In school days, principal plus interest was amount. Principal is 2 crore 6,750. Interest will be 2 crore 200,06750. Interest will be principal into rate. Rate means, let us say R, divide by 100 into time, 9 by 360, and this is equal to 200,31759. So, we are actually using the mathematics they teach in 4th standard classroom. Okay? So, I hope you can apply this trick also. So, now we will go to the next point. You have just computed simple interest on the opening balance. So, write down dirty proceed. First, write the formula. If you use formula, it will help you to do the things faster. That is why formulas are designed. Okay? That is why formulas are designed to make your calculations faster. Otherwise, you can simply apply your basic arithmetic and still you will reach the answer, no harm. I advise both. You should know both the methods. So, write down dirty price. Dirty price, the equation is first leg oblique or start proceed is equal to, first leg or start proceed equal to nominal value into dirty price by 100 into 100 minus initial margin by 100. Nominal value into dirty price by 100 into 100 minus initial margin divided by 100. So, I am going to put the numbers again for you. This is the amount borrowed. This is the amount borrowed first leg, which will be equal to the face value of the bond 2 crore into the proportionate value this is multiplied to get the proportionate value. Proportionate value means if 100 rupee is the face value, this is the dirty price. If 2 crore is the face value, how much should be the value? Okay, and you are not going to get the full value. The lender will keep 1.25% margin. So, therefore, this portion becomes 98.75%. He will give you only 98.75% of this amount. So, I will request you to solve the equation. Find out the value of dirty price and you get 2 marks, Very important question you might get in your exam. So, after you solve it, you will get 101.30. Yes, check 101.30. That means this is the full price. This includes interest accrued also. That is why they have asked you the third question, what is clean price? This includes interest accrued for 240 days. Therefore, I am going to remove interest accrued for 240 days and that will give me the clean price. Okay, please check your calculation. If you are not getting the same answer, please check the calculation, because calculation you have to do only. One student is getting a different answer, but I can't help it. I have checked my answer from the institute also and I have done the calculation myself also. So, the answer that we have got is right. The answer has been taken from institute suggested answer, we have matched it. Now, write down step 3, calculation of clean price. Calculation of clean price. Dirty price is equal to clean price plus accrued interest. Dirty price 101.30 is equal to clean price plus 100 into 240 divided by 360 into 6%. Now, please solve the equation. You can just compute this portion first and deduct it from 101.30. So, the answer is 97.30. The answer is 97.30. So, these are the 2 additional questions we solved today on repo. Okay. Now, I am going to give you another question which you have to write the question also. Recently only I have decided to add this question. This is a new question never asked in the exam. 97.30 was right, very good, and only check the equation again. I hope you will be able to get it. Okay. And if you are not able to get it, solve by simple interest formula, principal plus interest is equal to amount. Please write down one question. Question also I will also write, you will also write. RBI offers 91-day treasury bill to raise rupees 15,000 crores. The following bids have been the following bids have been received. The following bids have been received. So, RBI wants to raise 15,000 crores of rupees. So, they are inviting bidders. So, this is an auction which is happening. So, draw three columns: bidder, bid rate and amount. How much funds are required? The funds required are 15,000 crore. For how many days? 91 days. Underline both numbers. Now, there are three bidders A, B, C. One day you will also go to auction. If you join some big company or big bank or something, then you will also go and you will also do the bidding. So, bid rate is 98.95, which means if face value is 100, bidder A is willing to buy at 98.95. Bidder B says, oh, I am willing to pay 98.93. Bidder C says, no, I will pay 98.92 only. And how much amount they are bidding? A is bidding for 18,000 crore. So, A says I can invest up to 18,000 crore. B says I can invest up to 7,000 crore. And C says I can invest up to 10,000 crore. How much amount do they require? 15,000 crore. So, there are two questions. A, what is the yield for each of the price? What is the yield for each of the price at which the bid has been made? At which the bid has been made. At which the bid has been made. So, you have to find out the yield. If somebody is willing to invest 98.95, he will get 100 rupees after 91 days. Treasury bills are issued at a discount. On maturity, you get the face value. So, there is a yield involved, and that you have to find out how much rate of return the bidders are expected to earn. Point number B, second question, which is important. This you could have done yourself also. Who are the winning bidders? Who are the winning bidders if it was a yield based auction? If it was a yield based auction, AUCTION, if it was a yield based auction and write down here and how much of the security will be allocated to each winning bidder, and how much of the security will be allocated to each winning bidder. The question ends here. So, I will just explain the question to you. RBI want to raise funds of rupees 15,000 crore by issuing a 91-day treasury bill. Okay. Then they invited bids. So, it is like an auction. Three bidders came. A says, I am willing to buy at 98.95. B says, I will buy only at 98.93. C will demand 98.92. C says, I will invest this amount. I need to get 100 on maturity. B says, I will invest 98.93. I should get 100, and similarly A 98.95. and these are the amounts they are willing to invest. So, what RBI does, if it is a yield based auction, RBI will compute the yield of each party and RBI will accept the bid of the party who asks for lowest yield, because RBI would like to pay lower interest. So, the one who is asking for lower yield, he will be allotted the bonds first, and if it is not sufficient from one bidder, then they will go to second bidder whose yield is second higher, okay, like that, until they reach whatever amount they wanted to raise. Now, first question is calculation of yield. So, write down answer. Okay. I will write on the next page calculation of yield. Calculation of yield, bidder and yield. In yield column, write the formula F minus P divided by P. So, this gives you yield and we have to convert into per annum. So, 365 divided by 91, because, or you can write 91 days, because this question is 91 days, divided by 100. So, formula also I have written. First, bidder A, F means face value, assume 100 always, minus 98.95 divided by 98.95 into 365 by 91 into 100 into 100. Yes, please reply. The answer is how much? Please reply, what is the answer? This is a new question, it is not in your study material. 4.26%, but they can ask you. We have to be one step ahead of what institute is thinking. B is 900 minus 98.93 divided by 98.93. Yes, reply now the answer for B. Waiting for your answer. Come on. Waiting for your answer. Yes, anybody this side? The next answer is 4.34%. 4.34%. 4.34%. Now write down C. 100 minus 98.92 divided by 98.92 into 365 by 91 into 100. Yes, very good. Come on, next one. Answer for bidder C. Answer for bidder C. You can round off in 2 digits. Yes, come on, 4.38%. So, this is your first answer, which is nothing but basic calculation. This was the basic calculation. So, whom should RBI give the bond first? The one who wants lower amount, the one who wants lower yield. So, either you can look at the yield and reply, or you can look at the price. A is willing to pay 98.95, whereas C is willing to pay 98.92. So, in case if you have to use the price for decision making, you will first allot to the person who is willing to pay higher price. If you have to allot on the basis of yield, you will first allot to the one who has lower yield, who demand lower amount. Is it right? Okay. So, therefore, either you take the lowest yield or you take the highest price, both will give you same answer. There is an inverse relationship. Okay. So write down the note, please write down the note. Okay, 4.38% was right, 4.38% was right. So write down note, write down a note. As this is a yield based auction, as this is a yield based auction, now who will get A? Now let me go back to the question. A is willing to subscribe 18,000 crore, RBI wants only 18,000, sorry 15,000. So from A only RBI's requirement will be met. So RBI need not go to B and C. But if RBI's requirement was, let us say, more than 18,000, say 20,000, so then they would have taken from A 18 and 2 from B. But here requirement is only 15,000, A is willing to subscribe 18,000, entire requirement is met from A. So RBI will take the funds from A only. So write down the concluding line. As this is a yield based auction, and since the entire amount of rupees 15,000 crore, entire amount of rupees 15,000 crore can be sourced at the lowest yield, that is 4. What was the lowest yield? 4.26%, 4.26%, comma, only A's bid would be accepted, B and C are not required. Only A's bid would be accepted for rupees 15,000 crores. Only A's bid would be accepted for rupees 15,000 crores. Only A's bid would be accepted for rupees 15,000 crore. So this is the answer of this question. This is the answer of this question. One more question I will dictate, which is similar to this one, but a little advanced version of this also. So please, dear student, requesting you to note down one more question. Little fast. RBI offers similar question but with a small difference. 91 days bill to raise rupees 5,000 crores. So this time the amount is 5,000 crore, 91 days, underline. The following bids have been received. The following bids have been received. The following bids have been received. So there are three there are bidders, bid rate, and amount in rupees crores. So bidders are A, B, C, D, E, F. Okay. Bid rate 98.95, like the previous one, 98.93, 98.92, 98.90, one more 98.90. Oh my God, so this is equal. So if both are to be selected, they will get proportionate amount. They will get proportionate, and then 98.87. And how much amount they are willing to put? A 1800, B 700, C 1000, D 1200, E 600, F 200. Is that total enough, or I should give you more? Yes, seems to be enough for raising 5,000 crore. So now write down the question. Question number A is, who are the winning bidders? Who are the winning bidders if it was a price oblique yield based auction, and how much of the security will be allocated to each winning bidder? How much of the security will be allocated to each winning bidder? So very good question. Then write down question number B. If this was if this auction was a single price auction, everybody will pay the same price. Single price auction means everybody would pay the same price. Everybody would pay same price. Single price auction. Then what is the price? To be paid? Then what is the price to be paid by the winning bidders? What is the price to be paid by the winning bidders? Now two questions are there. First is if it is based on price or yield auction. Now without solving we can understand A has the lowest yield, B has higher yield than A, C will have higher yield than B, and like this, because higher the bid rate, lower the yield. Lower the bid rate, higher the bid rate, lower the yield, lower the bid rate, higher the yield. RBI will give preference to the one who is demanding a lower yield. Okay. So it is given in that sequence also. So our job is easy. So first write down. Now first we will discuss and then we will write down. Now you see RBI wants 5,000. So RBI is going to first select A, 1800 gone, 1700, 2500, 1000, 3500. But these two fellows D and E, these two fellows D and E are quoting the same bid rate, and they are quoting 1200 and 600. I have already accepted bid of 3500 from these three parties. Now I need 1500 more. Now I need 1500 more. So that 1500 will be taken from D and E in the ratio of the bid amount. In the ratio of the bid amount, that is 12:6, that is 2:1. So that was the new thing. So write down allocation, answer, write down allocation of bids, allocation of bids. Bidder price quoted, approved amount. Bidder price quoted, approved amount. So first bidder A 98.95. Without calculating, we can say that the yield would be lowest in case of A, so his entire bid would be accepted. B 98.93, his second rank, his entire bid will be accepted. C 98.92, 1000. So this together is 3500. D and E, they have quoted the same rate. So now what we will do, the remaining amount 1500 we will allocate in the ratio of their bid amount, that was 1200:600. So this will be 12/18 into 1500, 1000. This will be 6/18 into 1500 is 500, and total 5000. This way, if the winning bidder is selected on the basis of price or yield based auction, this is how they will be selected. So that is your first answer, answer of part A. Answer of part B now. If this auction was a single price auction, now in this example what happens, different bidders are paying different amount, because that was the criteria. But now the criteria is all of them will pay the same price. Then what is the price to be paid by the winning bidders? So RBI will find that I have to take money from A, B, C, D and E. Only then I can raise 5000 crore. So what is the price they are charging to D and E? 98.90. So they are going to charge the same price to A, B, C also, because it's a single price auction. So they will find out at what point their requirement is met, and that price will be charged to all the bidders, okay, who are above this. So this 98.90 is the cutoff. So all those who have bidded above 98.90, those will be allotted the bonds. So write down the answer for part B. there is no calculation involved. From the first answer only you can generate the second answer. So, answer of part B, had this been a single price auction, had this been a single price auction, the price to be paid, by the winning bidder, the price to be paid by the winning bidder would be rupees 98 point, what was the last one? 98.90 will be rupees 98.90 will be rupees 98.90, and you just note down one homework write down, which you will do yourself. Calculate yield for each bidder. That you can do as homework. Calculate yield for each bidder. I will not do it. If you are interested, you can do it. They can ask you one more question, like in the previous problem. They can ask you to compute the yield for each bidder. So, you will apply the formula F minus P divided by P into 365 divided by 91 into 100, right. So, this answer is over. Thank you very much. See you soon. Bye bye. Take care.